Okay, and we are live. Good day and welcome back to another episode of the Air Force podcast. My name is Yaku, and today we've got Robert van Eyden here with us. Welcome, Robert.
Good afternoon, Jaco. Pleased to be on the show.
Robert, what initially sparked your interest in trading and being a trader and going into I would say, in the trading division, that kind of industry?
Jaco, I've been quite interested in markets from a very young age. When I started studying at the University of Pretoria, initially I wanted to become a chartered accountant. In my second year, I discovered that BCom accounting and the financial markets and the stock exchange have got nothing in common. And I actually changed my degree from a BCom to a BCom Business Economics, which might surprise you. Why business economics? Back then, business economics was divided into a couple of subjects. One of the subjects was financial management, and then one was investment management in your third year. And the sole purpose of both finance management and investment management was to focus on the stock exchange. I started dabbling when I was about 18, 19. I opened up 2 accounts. The markets weren't as efficient as they were now. At the moment, if you trade through the JSE, you've got a 3-day settlement period. Back then, it was 14 days. You've got electronic settlement as well. Back in the day, you had to bring in your scripts, get a script, take a script. So it wasn't very efficient, and information was also not very freely available. You know, you can go into Yahoo Finance. There's a wonderful platform called TradingView, and you can get a lot of information. So it started there, and then it started building up. When I was about 21, I discovered technical analysis. And technical analysis is what most people do in trading. And I need to be quite clear, trading and investing are 2 different things. So investing is long-term. Trading is anything from holding a position from 1 minute to potentially 3 months. Back then, I was a bit confused. Usually, a bad trade becomes an investment. So that's usually what happens. So I started delving down technical analysis, which is a big thing now. But when I was about 21, it was frowned upon and it was looked upon quite badly. They viewed fundamental research as quite important. You look at the balance sheet and the income statement. And now, if you look at it now, you know, technical analysis is the mainstay in terms of trading. Anyone pulls up a chart and they can draw up, you know, moving averages and things like that. So that's where I started. And then over the years, I've been involved in different kind of situations with the stock market. I was a research analyst at Standard Bank for many years. And then for the last 12 years, I've been managing various stockbroking firms in South Africa. I managed Absa Stockbroking, F&B Stockbroking. I was at a small BE stockbroking firm called Tebe Stockbroking, and I'm looking after IG Markets South Africa.
Yes, okay, so that is quite a portfolio that you've had. And what does it mean to be a stockbroker? What is your day-to-day job then?
Yeah, so it's an official definition. So where I'm now is not actually a stockbroking firm. Where I'm now, we sell, or people can purchase or trade. Let's use the word trade rather. They can trade CFDs and forex. If you're a stockbroker, what does that mean? First of all, the firm needs to be a member of the Johannesburg Stock Exchange. So the firm needs to be a member, and then to call yourself a stockbroker, you need to write 5 exams. It's a combination of, one exam is basically on tax, one is on financial planning, and then a broader one on investments, and then there are 2 on regulations. So they put a huge emphasis on regulations. Once you've passed those exams, you become a member of the South African Institute of Stockbrokers, and you can actually call yourself a stockbroker. So A lot of people call themselves stockbrokers in South Africa, but if you're not a member of the South African Institute of Stockbrokers, theoretically you can't call yourself a stockbroker. I am still a stockbroker, even though IG Markets is not a member of the JSE. I'll never lose the acronym.
Okay. And then what does IG Markets do? What is their approach and what is their day-to-day business?
So IG Markets is an international firm. They've been around, next year they'll be around for 50 years. So they're in 17 countries. In most countries, they offer two things. They offer share trading and what is known as leverage trading. So leverage trading is basically where you can buy or sell a share, and there's some sort of leverage. They also offer FX. In South Africa at the moment, we only offer leverage trading. So we only offer contracts for difference. So those are CFDs. And we offer FX as well. Internationally, the group also offers crypto. We don't do it at the moment, but our clients can actually participate if they open up a UK account, and they can trade cash cryptos and CFD cryptos.
Okay. And then while you're now doing that, and you're actually now currently only managing the firm and only, I would say, on top. So you're not trading on your own now.
No, I'm not trading on my own at the moment. I have traded in the past. I've only been with IG, so when I was looking after F&B stockbroking, I did trade. At the moment, I haven't traded in the last about a year and a half, and the reason for that is I'm about 1 year at IG, so that took my focus. And then the other big thing is last year, April, I was informed that my book, The Badass Trader, was accepted for publication. And there's quite a lot of work in terms of getting it from Word onto a bookshelf or a shelf at a bookshop.
Okay, and then on the book, we just talked about that page behind you in the book. You said the book is now out for 4 weeks. That's correct.
That's correct. It's been out for 4 weeks. So it was meant to come out a bit earlier. But unfortunately or fortunately, I'm not sure, I've had some very important books ahead of me. It started in January. My publisher's Penguin Books. So in January, they brought out the Spare book by Prince Harry. And then they told me it's going to be delayed again, but they couldn't tell me why. And then they also published Under the Rater's book as well. So every time there was someone ahead of me, but I wasn't quite sure why. So I was probably ready for publication end of last year, but given the names of the other two, it was held back, and they published about the 15th of June, roughly there.
Okay. And then what inspired you and motivated you to start writing this book?
Okay, that's a good question. I've written 2 other books, which was self-published, and it's more on the investing side. So the idea, maybe we could do a podcast on that. That would be more on the investing side. For the last 4.5 years, I've been publishing a weekly trading principle on LinkedIn every Saturday. So we're sitting at about 212. And then what happened was I was approached by, I won't mention the names, but I'll mention the country. I was approached by a UK publisher. And the UK publisher approached me and they asked if I would be interested in publishing a book based on the principles. I said, yeah, I was keen on the idea. And then they said, okay, that's fine. You just need to do a submission, which I did. The submission was about 20, 30 pages. And then, Yaku, you wouldn't believe it. After that, they came back and they said they're not interested in the book or the idea. So I put in all of that effort. And then I thought, well, you know what? I've got all the effort in. And then I approached 2 other publishers. And within 1 week after submission to Penguin, it was accepted. So I was very fortunate. But there's another little interesting story about this book. So the book's title, the initial title of the book was The Unbeatable Trader. And then last year, October, I thought I wrote an email to Penguin and the editor in chief, and I said, you know what? I think Unbeatable Trade is not a bad title, but the problem is, will it resonate with younger people, Generation Z, millennials? And I said, how about Badass Trader? And I actually didn't think they would like this. And within a day, they said they love the title. So in terms of writing the book, the inspiration wasn't me. It was basically I was asked to submit,
Mm.
and I got rejected. But here we are. I've got a book now.
Okay. And what kind of concepts or key notes is in your book that we can take maybe further?
Yeah, I think it's important to know. So, I think when people see trading books, the two things they immediately get attracted to is basically, is there like a secret source or secret method? And if I follow that method, I'll retire tomorrow. That's not in the book. And we know that successful trading, there is no secret source. So where do I focus on? I actually focus on, if I look at the first chapter, I look at what are the four uncommon truths of trading.
Mm.
My second chapter is, like any business, you need a plan, a business plan, but in trading, you need a trading plan. And then the biggest thing where most people get stuck up in trading, which I address in chapters 3 and 4, is basically how do you manage your emotions? Because trading is a very emotional experience. People get and there are three emotions that play a major aspect in trading, which is fear, hope, and greed.
Mhm.
And you need to manage them very selectively and very carefully, because otherwise you won't be able to trade going forward and you'll blow up your account.
Okay. And then you mentioned the four principles or the four.
The four uncommon truths of trading.
Okay. Yes.
Let's first start off with what do the first question most people ask, and how I got to the book as well. I have seen many people trade over the years, many clients. I've spent a lot of time with clients, so that's my angle. So I trade myself, but I've also seen some very successful clients and then a lot of unsuccessful clients. So I know exactly, after all these years, what works and what doesn't. So the first question most people ask about a trading system is how accurate, or what is the win rate?
Mm-hmm.
And a lot of people get caught up in this when, there are a lot of unscrupulous providers out there, and they would say my win rate is 75% or it's 90% accurate. And then people get really excited, and then they buy the course, or they go on the TikTok or the Telegram or whatever you want to call it, and then they don't achieve these results. The first principle, which I mentioned in the book, is that you don't know. It's a random outcome. You don't know if you place your trade today, if it's going to go in the direction that you want. So that's principle number one. You need to understand you're dealing with something that is random.
Can I quickly stop you
The
there?
second one,
Uh,
yes,
you now said that you're dealing with something that is random.
yes.
Um, isn't that like exactly like gambling? Then isn't it that you're just taking the chance and hope for the best? Isn't that what's happening then, or what do you say about that?
Yako, that's 100%. So I get that quite a lot. Is trading not gambling? Yes, and trading is gambling. And I'll come to where does it become different?
Mm,
And that was basically principle number 4.
okay.
But let me go into principle number 4. The only way to succeed in trading, and the only difference between trading and gambling, is when you start managing the risk. So, in other words, you know how much you are willing to lose per trade. You know when to get out of a trade. And this is what people don't do. They get into a trade, but they would take everything they've got, put all their money into one trade, and they don't get it out. So I spend a lot of time in the book in terms of what I define as risk management. Your risk management distinguishes if you are gambling or trading. And a lot of people don't know that, because when they get in, they look at the win rate, but they forget that you need to manage the whole trade as it goes through. So that's actually the fourth principle, that risk management actually makes you a successful trader, not the win rate.
And how would you say you should manage your risks? Should you maybe take into
Okay.
consideration? You previously said how much you are prepared to lose, but isn't that like a
Yes.
negative outlook on this, or how should you manage your risk? Or how do you
Okay.
think you
So,
should manage your risk?
okay, I'll give you an example. So, if you start losing money, if you lose 10% of your capital, you need to uh, make a return of 11%. If you lose 50% of your capital, you need to make a return of 100%. And that people don't know. So, in terms of risk, I look at three things. How much are you going to risk per trade? And that is called the 2% rule. So, you should never risk more than 2% of your capital. So, if you've got 100,000 rand, and if you trade, if the position goes wrong and you lose on it, you only have lost 2,000 rand. That's 2%. That's easily and very manageable. So that's the first thing. The second thing is the cost of a position should not be more than 25% of your capital. So the first thing is you're going to say, okay, I'm willing to lose 2,000 rand, and the cost of that trade must never be more than 25,000 rand. And then the third principle is you should not have more than 5 positions open. So what most people do is they probably have only one position. They put 100,000 rand in the position. They don't apply any risk. And then when the thing goes down, they don't believe it's going to go down, because this is where the fear, the greed, and the hope comes in. And then they lose money.
Okay.
But it comes back to principle number 2.
Mm.
The principle number 2 is an interesting one, is that when you do trading, very similar to gambling, you will have clusters of losses. You could have 3 in a row. What happens then? Then people start either doubling up, revenge trading, and that will lead to losses. So that's on the negative side. What happens if you've got 3 winners in a row? Then the greed factor comes in. Then they forget about everything. They double up their positions. They get really excited, and then they also blow up their account. So this is why I call it uncommon thinking, because the first thing is you're dealing with something that is random. The second thing is you're probably going to lose more than you're going to win. And then you need to apply risk management. And then ultimately, what distinguishes trading from gambling is that you need some sort of edge over the market. And it needs to play out of over 100 trades at least. Because like I said, you are going to have losses. You're going to have, personally, I've had like 11 in a row. But I haven't blown up my account. I can play again tomorrow. But if you put 100,000 rand in, or you play 30,000 rand at a time, after 3 losses in a row, game over for you.
Okay. And then what would you say is then your third strategy, or your third, what do you call them, uncommon perceptions?
Yeah,
Uncommon truths.
uncommon principles.
Okay.
Yeah, look, I think so. So I'll go through them slowly. So
Yeah.
the first one is basically you're dealing with a random outcome.
Mm.
The second thing is you'll get a cluster of losses and wins, both sides. It will happen. You can have 3 in a row, 3 losses. As I mentioned, you can go up to 11. Your third thing is the protection of your capital. And there's a very famous investor out there called Warren Buffett, and he's got 2 rules. His first rule is never lose capital, and rule number 2 is never to forget rule number 1. And it's the same thing with trading. I've seen it so often that people, they want to get rich very quickly, and then they have 100,000 rand, and then they would trade. They would put a position on 100,000 rand. The fourth principle is that you need some sort of edge. So, what does that mean? That means every time you win at a trade, you win more than you lose. You should be winning about, at minimum, twice as much and lose 1.
Okay. And then as well, what kind of like you said, what kind of edge can you get on the market? How can you get that not the thing that the house always wins, that kind of that extra bit. How do you get that?
Yeah, it's a good question. I've seen a lot of different edges. So if you look at a normal casino, and I won't go into, I'll, for example, like blackjack. Let's talk about poker and blackjack. The edge of the casino is 4%. It's not a hell of a lot. But what the same thing with trading as well. The casino stays open. With
Mm,
trading as well, you need to trade every time. You're gonna have winners and losses, but if you've got an edge, you're gonna make money. But there will be periods, even with the casino, there are periods that they lose money.
mm,
So in terms of your edge, there's a system. So it's some way of getting into a trade and getting out of a trade. Um, so that's the first component of the edge. And your win rate doesn't need to be exceptionally high. You might be surprised. You can get away with about 30% accurate. So it means 70% of your trades are going to lose money. But the big difference is if you apply good risk management and for each trade you make twice as much in the losing trade. So you can do the sum as well. If you've got seven, if you've got 10 trades, you lose seven, but for those seven you lose R1. And for the three you make like R2, you are gonna win eventually.
okay.
Yeah. So but you need to let it play out over time. But the problem is people get impatient because there's a lot of these you see it as well. You go on Instagram and Facebook and you see these guys with their Ferraris and their dark sunglasses, and trading is easy and just follow me. Yeah.
And that's definitely not the case. And now, while
Yeah.
talking about that, you also mentioned the three emotions and how that three
Yes.
emotions, how can that
Yeah.
emotions affect your trading, and how should you go to like maybe calm the emotions, maybe not let the emotions take over? What's your advice on that?
Yeah, it's a good one because so fear is an interesting one. So fear can prevent people from trading.
Mm,
Okay, so that is one thing that people get scared. But the one thing with managing fear is that you need to know upfront how much you're willing to lose. And this is not. I mentioned on the book you need to rewire your brains because we never taught like this. We where do you hear that you need to you we are taught we're going to win and we need to win and we need to do this. Nowhere have we been taught in schools or anything how much are you prepared to lose, because that's not how it was. So to manage your fear, to say, okay, you know what, Yaku, if I trade this position and it doesn't work out, I will lose 2%.
mm,
And if 2% is too much, you can bring it down to 1%. I know very successful traders that risk only 1%. Some even go to 0.5%. So your how much you're prepared to lose should manage your fear. Then on the greed side, so that's also an interesting one. So on the greed side, the problem with the greed side is there's a lot of people out there misleading advertising. You can make 2-3% a day or 20% a month. And that looks very exciting, but it's not possible. It's really not possible. If you're making 50 to 100% a year, that is possible. 30% is on average what you should be able to do from trading. So that's where the greed comes in. Where greed also comes in, if the price goes up and up, people don't get out. So you need to have a technique to say, I'm going to get out at a certain level. You either need to set yourself a target, or if some technical indicator beats, you need to get out. But it's human nature. When things are going well, it can only get better. And when things go badly, it'll only go worse. So that's greed. Then hope. Hope is an interesting one. It happens very often that people are in a position and they should have got out, and they don't get out because this time it's different. This thing can't fall more. It can fall more. You don't know because it's random. Um, yeah, or the government or the markets are going to do something else. So there's this hope. It's fallen down. It's all these analogies we've got in life. Third time lucky. It's been down 2 days. Surely it needs to, 2 days it needs to go up. Gambler's fallacy is another. It's a big one. Gambler's fallacy is basically where you believe, like, if it's gone down for 2 days, then the next one should go up, and that works with hope. The problem with hope is usually that people actually lose their money because they can't believe it. And then the other bad thing with hope is if they are sitting in a position, then sometimes they add to the position. It's called averaging down, which is a big no-no. So they throw more money at the problem. And why do we do that? Because when we pay for something, there's value created, and we don't like giving up on the value. So it's a bias out there. It's one of the biases out there that also get to play. So when you've paid for something, you attach a higher value on something, and the market actually doesn't care, and that's when people don't get out. So there's a lot of these things. The mind, the trading mind, is probably the big thing to conquer.
Okay, and then we talked about that part of your book that is behind you now, just before the recording, on why you should trade and why you
Yeah.
should learn to trade. And after all
Mm.
the things you've said now, why should people learn to trade?
So why should people learn to trade? So I think most people want to become financially independent in some way or fashion. So to become financially independent, there's a couple of routes. So you can go the entrepreneurial route. The challenge, not everyone's got entrepreneurial, inclinations in them. So that is a challenge. And also with the entrepreneurial route as well, you need to start businesses and things like that. So there's a lot of sunken costs that you need to do. So if you want to get financially independent, you need to look at other ways of passive income.
Mhm.
Um, for example, you could go the investing route. Um, and my first book I wrote about that is, every month you put away money into an ETF that tracks an index, and then voila, in 20 years, by the power of compounding, you would be successful. So that is one way. It's a bit slower. And then the other way is trading. So trading has become a lot easier. Access to information, platforms, the costs have come down. So the barriers of entry are quite low.
Mhm.
The other advantage of trading is very similar to e-commerce. You can pretty much do it anywhere in the world. You can pretty much trade at any time. So the barriers of entry are extremely low to get into trading, which is a double-edged sword at the moment, because that's why so many people are attracted to trading, because it's so easy to get in, so much information. You just look on Amazon. I think there are hundreds of thousands of books on trading. If you go into YouTube, there's a lot of information on trading. So it's pretty easy to get in. Uh, but again, the statistics are quite alarming. It's probably about 10% that succeed at it, and they succeed at it because they understand you need to rewire your brain specifically around risk management, managing your emotions, and have some sort of edge.
And with that being said, only the team 10% is actually being successful. How did that people
Yeah.
stay consistent? How did they get to being part of that 10%? As you said, but
Mm.
what other things do they need? Do they uh, do they have certain rituals? Maybe do they have certain patterns, routines? What do they have to stay consistent and eventually get there? Because as you said, it's not a quick fix. It's not a quick thing. You have to go through the motions. You have to
Mm.
go um, like the full distance. So how do you get there?
Okay, so that's a very good question. So why do some people succeed? Why a minority succeed and the majority don't? So I think the minority first figures out that you do need to rewire your brain for trading. Another thing I haven't mentioned on successful trading. which most people think it's not, but successful trading is extremely boring. When I tell that to people, people think trading should be very exciting. And what I mean by that, successful traders have got a trading plan, like a business plan, and they execute it in the same way every day. And sometimes it doesn't work out, and sometimes it does work out, but they consistently execute this trading plan day in, day out. And human nature is of that we get bored very quickly, and we can't believe that, following a recipe day in, day out can actually achieve success. So that's what the 10% does. They've got an edge. They follow their trading plan. They understand that there will be periods of losses. There will be periods of lots of wins. And they also need to manage their emotions during this period, that they don't get lost in the fear, greed, hope cycle.
Mm. And then a lot of things about trading boards and AI boards and that is in the market, that is in the news now. What do you think of that? What is your idea of that?
Yeah, I've had a lot of these questions when I was a bit younger. In the late 90s, they started with neural networks, which is a part of artificial intelligence. And I remember neural networks came out in the 90s, and it was the buzz. So it's also machine learning. It's very similar to Chat GPT, which is deep learning. So but they both AI. And then in the late 90s, what happened? Interest in neural networks actually disappeared in the late 90s. And the big event was in 2008 was the global financial crisis. The problem with AI, and I'll talk with AI in broadly, so that would be ChatGPT, neural networks. Back then it was genetic algorithms, fuzzy logic, etc. The problem is the economy and the financial markets aren't closed systems. So in other words, there's always something new happening to the markets that your neural network or your chat GPT will never know. And a classical example why the allure of neural networks dropped in 2008 because of the global financial crisis, it could not be predicted. And a lot of people lost a lot of money, which brings me to ChatGPT. All of these models work on historical data. So for them to succeed, they'll look at historical data and they will generate you some code. And it might work for a short period. And then there is a black swan event because we're an open system. So, for example, the last 3 years we had COVID, totally unpredictable. Not one model could pick that up. Then 2 years ago, 1.5 years ago, the Ukraine invasion, no one could predict it up. And these had massive impacts on the market. So these are tools that can help in terms of process and coming up with great ideas, but they are limited because they're not forward looking, because the economy and the financial markets is an open system and it'll always be an open system.
Okay. And then with that in mind, how do you think like beginner traders and people that wants to go into trading should approach trading? Should they
Mm.
also just try to get maybe invest in somewhat, because there's boards that people sell a lot of boards. Should they then only go buy a board, give the money to the board that they trade, or should they rather do it on their own, go through the emotions? Then what do you suggest?
Yeah, yeah, I'll come with the buying the bots. And I've been long in the game as well. So, these bots are, you don't know if it's a real bot or someone that has just developed a little system and calling it a bot.
Mm.
Over the time, they've had different names, signals, robots, bots. We don't know what they've created. It's for me, just a label. My recommendation would be most of the brokers, including ourselves, you can open up a demo account. And I get a lot of questions from people to say, I want to become a hedge fund manager. I want to become a successful trader. I said, you need to open up a demo account. And then after 100 trades, first of all, you need to see, have you made money? That's point number one. So most accounts you can open in South Africa, we offer like 100,000 rand. Some offer a million. You open up your account and you trade on the demo account. The problem with the demo account, there is a problem. It ignores emotions because it's not your money and there's no emotional attachment. And we know that money is emotion. But during that period, you can actually see, um, are your winners bigger than your losers? And you can actually see, are you making a positive return? That's about 100 trades. So depending how often you trade, so if you trade, this could take up to 2 years.
Okay.
And again, people don't want to wait 2 years because there's greed. So I would rather buy a bot. No one's tested this bot. The other problem with a bot, you don't know what the risk tolerance of that person is who created that bot. Let's say if it is a real bot, they might they might trade 5% away per trade, or they might go as low as 1%. But that you never know. You only get told this is a bot and this is the return of the bot, but you don't look at the other. What are the risk parameters of the bot? And that's where a lot of people get caught out when they do copy trading or bots or whatever, because your risk profile, my risk profile are totally different. The amount of capital you've got and the amount of capital I've got is very different. I usually advise people, if you want to trade, if you want to get into trading, you need to look at a minimum of 100,000 rand.
Okay, and then you also now mentioned copy trading, and why do you think is the biggest risk there? Because
Yes.
as you also said, you do not have this. Everybody don't have the same amount of capital. They don't have the same amount of knowledge. So, what do you think is a risk by doing that?
So why is copy trading not allowed in South Africa? I'm not you.
Tell me,
So if
tell me.
you if you if you if you're a regulated financial services provider in South Africa, you cannot offer copy trading in South Africa. So, for example, we are regulated by the FSCA, who regulates the financial market. The first thing is you need to do what I've mentioned. You need to do a financial needs analysis. So, for example, let's say I was a copy trader guy, and I actually, if there was approval in South Africa, I'd come to you and say, Yaku, what is your risk profile? So that's important. So no copy trader knows your risk profile, and then the capital is the other thing. I've seen it over and over, especially with youngsters coming into the market in the FX world, where they see copy trading or bot trading or signal or robot, whatever you want to call it. They come in with 500 rand, while the guy who generates the signal is probably sitting with 100,000 to 200,000 rand. And then he might have a higher or lower risk tolerance. Remember, we're all different how we react towards risk. We like return.
Mm.
You and I both like 80, 90% accurate systems. We both like that. But our risk towards is totally different.
Okay, yes, definitely. And then, what other advice do you will you give people that maybe want to start trading now?
So the advice I would give, and then the big thing is to understand that what you think is required for trading success is not what you think.
Mm.
So I address that in the book. The second thing is you need to open up a demo account and get a sense of what are you doing right and what are you doing wrong. Once you've achieved that level, then you can say, okay, I'm comfortable in terms of moving my demo account to an actual account and then trade exactly the same, because as I said, successful trading is boring trading. And then, in terms of, again, so a lot of people will ask you the magical question is when to buy and when to sell. There are a lot of systems out there, bots, non-bots. There are a lot of systems. You just need to make sure whatever system you pick, you apply risk management to it, and then you will succeed. But you need a period in your demo time to look at this to say, you know what, I've got 100,000 rand. I've gone into YouTube or I've read a really good book. This is the system I like. I like a moving average system or breakout system. Okay, I've seen everything. I've seen people using astrology. I've seen people
Uh,
listening to
how
other
accurate is
people. I've seen
astrology?
everything. And well, there's a book. There's a wonderful book by called the Delta Phenomenon, and he doesn't go into that's not more astrology, but he looks at the moon phases and the cycles of the moon. And I've seen it, and it works for periods, and then it doesn't work for periods. But you must just make sure in the periods that it works that you earn at least 2.5 to 3 times more than your losses, and then you'll be okay. So there's no what I get to the book as well in my introduction. There is no secret source. There's no formula. Anyone that tells you there's a secret source or formula are just trying to sell you and get your money.
Okay. And then you also mentioned the demo account, and you also said that there is no
Yes.
emotions in the demo account. So because it's not your money, you're just
No.
trying something out. But do you
No.
think, and that is what I was thinking now, when you're doing on your demo account and you find something that works for you and you do
Yeah.
it consistently, so that is what you're going to apply. You're going to take that system, and that's what you're going to apply with the
Yes.
real money now.
Yes.
Okay.
Yes.
Okay. Yeah.
Yes. And that's very important. So the guideline out there is about 100 trades, but it doesn't necessarily need to be 100. I think if you look at statistics, 25 is enough. So if after 25, you should have a good idea of the success rate. And remember, at the end of the day, how success is measured in a trading platform or trading system is called your edge or your equity, and you need to see your equity curve going up. But you won't. It's not like a straight line. There will be ups and downs, and there will be periods
So it won't
that you
be
don't do
exponential.
well.
It will not never be exponential and just going.
No,
Okay.
no. Whoever sells you or whoever comes with that, that's never been proven. Then you're definitely looking at a gambling system. And remember, in trading and in life and in gambling, there are periods that you're going to be lucky. And there are going to be periods that you make a lot of good returns, and then there are going to be periods you're not going to make good returns. But if you've got a system that generates, let's say, 3 times more than you lose, even with 50%, you can do the sums. You lose 50 at one, so that's 50, and the other 50 you make three, you make money, 1,000,
Okay.
and people don't get that.
And then you also mentioned that the trading boards, and I don't want to talk about the boards actually, but they only take into consideration maybe of everything is old information. Everything is they only use past information, and if I'm not, I think ChatGPT stopped in 2021. It has a limited knowledge from 2021 onwards. So, how do you think normal people or
Yeah,
traders should maybe keep their eye on the market and maybe continuous learning or what you call it
yeah,
CPDs or continuous development? Yeah. So,
yeah.
how could they approach that, and how could they maybe look at the markets or uh, be on the forefront or be on the top of that uh, part of the game?
Yeah, it's an interesting question because if successful traders, because of the short term, don't worry too much about the market.
Mm.
So they are aware. If you trade forex as well, you are aware. When releases are coming out, but you're not going to spend your time trying to unpack the economy because you're trading short term. One of the things that I do talk a lot in the book about is basically what you've mentioned is continuous improvement. So once you've built up your own track record, you can start playing around with things to say, okay, well, maybe I should have. I'll give you an example. So, for example, one of the systems that I trade with, if I've got 3 losing trades, I reduce the risk. So that's one way of doing it. So that I took quite a long time to figure that one out. So there's a wonderful Japanese term called kaizen, which is basically or kaizen, which is basically continuous improvement. So you should, after each trade, you should have a look at the trade and decide if it was this is very important, if it was a good trade or a bad trade. A good trade is when you followed your trading plan to the T. A bad trade is when you didn't follow it. So that's good and bad. And then the next step would be winning and
Okay,
losing.
so a
But to
good trade is
succeed,
not normally a winning trade. Is that what you're saying?
not
Okay,
always, not
okay,
always. But again, this is why I said your brain needs to be wired differently for trading, because you can have a good trade, but it doesn't need to be a winning trade. Because what you've done with the good trade, you've actually followed your boring process, and the outcome wasn't what you hoped for. But sometimes you can have a bad trade, so you violate your own rules, and it can be a winning trade. But the problem, you want to end up, and that's the one thing when you do your demo as well. After each trade, when it's closed down, the first question you have to ask yourself: was it a good trade? Not a winning trade, a good trade. So yeah, again, this is why I said trading is very different to what we've been taught. Then you start looking at the numbers, and you obviously want to grow. And then you start reviewing things like, for example, after 3 trades, I reduce my risk. I also discovered for one system, I should not be trading in April and October. April is usually Easter holidays, and the markets are very volatile. And October is just a funny month globally. Most market crashes actually occurred in October. I don't do that. Um, I also don't trade, in December. Up until about the 16th of December, you trade, and then it just drops off in liquidity. So that I learned over time, and I keep it all journal, and I write down, and it's okay, I need to improve this or that, because the system I'm talking to is a system that I actually picked up from another person. So it's not my own system. I looked at it, it had an edge, and I've just improved it over time.
okay. And then, what is the future for you now? You've just published your book. Are you thinking about writing a new one, or what is the future? What is your next goal?
My next goal.
Do you just
So
want to take a break for
look,
a few weeks, or
no, 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 definitely not, definitely not. So I don't know how. I think the sales of the book is going quite well, but I haven't got numbers.
I
So
think
there are two
it was number
scenarios at the
seven
moment.
in exclusive books, or this month, eh?
Yeah, it was number
Okay,
7 at the airport.
okay,
Yeah.
okay.
I think on Amazon, it's only in Kindle format. It's number 31 of all trading books at the
Okay.
moment. So that's quite good
Yeah,
for four
definitely.
weeks.
Yeah.
So what are my next steps? So my one step is I need to get a website. So I'm looking at website, and then on the website I'll have a basic course
Mhm,
in terms of the questions you've asked me. I get it a
mhm,
lot. How do I get into the market? I do a very complete example in the book where I go through it. I even tell the people there's a wonderful platform called TradingView, um, and it doesn't cost anything. You can put in 5 shares, and I mentioned in the book it's a CM indicator. That's the indicator I use. So it's on TradingView. So I go through it, but I'm busy. Well, I just need to tidy it up. I'm busy writing a course at the moment in terms of an introductory course, just to front load this. It was never my
mhm.
intention, because my intention of this book, I wasn't even supposed to write that chapter where I go through an example and I use Amazon, how I get in, how I get out, how I risk manage. So I'm going to put that on a course. So that's one thing I'm busy with at the moment. So I just need to get a website. The course is nearly there. And then in terms of if Penguin ever asks me for a second book, the problem is I've put my heart and soul into this book.
Mhm,
Um, there might be an additional chapter, for example, on mental models, how to apply mental models to trading. So I could add the 5th chapter to that. So that's a possibility. But what I would really like to do is bad at bad bad as trader interviews. What I would like to do is I would like to interview really successful traders, pick their brains, and then just take the best of each one. So we'll see, but it's still early
Okay,
days.
okay. That actually sounds exciting. And um,
Yeah.
on that note, I'm going to stop the recording now, but don't leave yet.
Okay.
Okay, and then to all the listeners, go and buy the book, go and subscribe, go and follow for Robert, go and when the website is on and out, go and subscribe to the website and subscribe to the course. And I think, I really think that it's going to give a lot of information and a lot of help to a lot of people. So thanks a lot, and thanks a lot for today, and thanks a lot for your time.
Thank you, Jaco.